Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And hello there, I am Yatin Mota.
Well, the winning streak that we have been witnessing on the Lal Street came to a screeching halt today with the Nifty shedding somewhere around 100 points or thereabouts. Profit booking was expected at highs and it has come about today. At one point in time, we were staring at a 200-point loss on the Nifty, a 1200-point, cut on the Nifty Midcap index, but we did manage to claw back from the day's low, although we did end in the red, but the cuts weren't as bad as we saw during the intraday session. So the Nifty ended above that 24,300 mark. At one point in time we had slipped even below that 24,200 mark, which by the way according to Chartist is a very crucial level to watch out for on the index. Sensex 420 points down. The Midcap index recouped most of the losses, in fact ended lower by just about 150 points or thereabouts. So it did manage to recover quite a lot of lost ground. The Nifty Bank index continues to go downhill. We saw an almost a 400-point cut on the Nifty Bank index, but it was the auto pack that saw the biggest losses today, because M&M was the culprit there. 6 to 7% kind of a cut coming in on M&M. We'll be talking about that stock in details. But aside of that, India VIX, mild gains today, but it's inching towards that 15 level. Aside of autos and banks, metals were among the top laggards. FMCG and Pharma managed to hold out. Among the individual movers, of course, there was Asian Paints on the back of source-based news that the company has hiked prices. That stock was up and about, so it really triggered last hour buying in paint stocks today. SBI Life, Divi's Lab, Britannia, Power Grid, these are some of the other movers. On the losing end, of course, M&M, top loser, almost a 6 to 7% cut coming in there. Tata Steel, Hindalco, these are some of the other laggards. TCS ahead of numbers tomorrow among the laggards, and Hero Motocorp and SBI were the other losers. But Yatin, paint stocks, Indigo Paints 10%, and even railway stocks came back in favor, right? RVNL was up somewhere around 10%.
Yes, and I think this paint move came after the announcement that Asian Paints has increased the product prices by 1.5% on an average. Be it Berger Paints, be it Asian Paints, be it Indigo Paints, Kansai Nerolac, all of these paint companies moved anywhere between 5 to 10% in trade. Obviously, Asian Paints being a large cap, the move was only 1.5–2%. But yes, good moves coming in for the paint industry, especially with the entry of the Birla Group, which is running the paints brand as Birla Opus. The entire pack was doing well. Now, if you look at other stocks which are doing well in trade, RVNL 12% higher. They won some orders, and obviously they formed joint venture with a Middle East company for providing services in the GCC region. So that is one stock to watch out for. Stock has been under strong momentum. NLC India, another 5% up for that stock. India Cement 5% higher. IRFC, Fortis, all of these stocks doing good. What did not do well in the stocks in the fertilizer space is RCF down 5%, Uno Minda down 5%, Thermax down 5%, Bandhan Bank, MCX, both of these stocks top losers on the FNO, down 4% each, and Delta Corp also, Nandita, after dipping 4% intraday after weak quarterly numbers, managed to bounce back, ended the day higher by nearly 2%.
Yeah, that's a strong bounce back coming in, given the fact that we saw 60% downtick in profit on a YY basis. Also, margins shrank quite a bit, but the stock managed to recover ground. But let's take a look at the stocks that are on our radar. Yesterday, Auto Pack was in focus as the UP government had waived off registration fees on hybrid cars. There was good news today. From a consumer standpoint, it's good news because M&M has cut prices of XUV 700, its top variant, by 10%. But of course there would be impact on earnings. Of course it also speaks volumes about the kind of demand we are seeing for passenger car vehicles. Because of all these factors, we saw a 7% cut coming in on M&M today. Prices have been cut of XUV 700 by 10% to 19.5 lakh rupees from 21.5 lakh rupees ex-showroom. Analysts believe that the price cut could marginally impact the earnings, but it is indicative of the weak demand for SUVs. For passenger vehicles as a whole, there has been weak demand. There has been a 15% decrease in walk-ins at dealerships due to the extreme heat wave conditions that we saw. In June, passenger vehicles saw a decline, and automakers are saying that further discounts will be decided on the back of the kind of sales that the month of July sees going forward. And if you talk about M&M's reaction, they've reacted to the price cut cut as well, saying that in the month of February, the price cut that was articulated as a as a part of business strategy is something that has been announced right now. So it's not like they have done it out of turn. It was something that they had already envisaged back in February, and they have just come out of that, and they've said that the impact on earnings would be very minimal. In fact, it would have no impact on earnings as well. So they have clarified on this price cut, and they've said that demand continues to remain good for their SUVs as well. But if you look at M&M, from a valuation standpoint, it is among the best performing stocks of 2024 so far. It is trading at a 25 times FY26 price to earnings, above 5-year average of 15.8. So that means looking a bit expensive after the kind of run up that it has seen, and this pricing strategy aims to revive consumer interest as well as sales of SUVs. Whether or not it manages to do that or not, that remains to be seen. But if you look at the stock, it has gained in excess of, I don't know how much, 60% or so on a YTD basis.
Could be.
Yeah.
And M&M is one of the top performing stocks on the Nifty. So yes, good returns in the last 12 months or so.
Yeah, and I think it's a good time then to, from a consumer standpoint, to buy some of these cars, right? Hybrid cars, you have got a tailwind coming in terms of registration fee waiver, and now these automakers also giving discounts.
So I think the camp which is hybrid, it is Maruti and Toyota, and the camp which is electric, that is Mahindra and Mahindra as well as Tata Motors. Obviously Maruti gets that advantage on hybrid cars, but I think the advantage also with electric cars, given the fact that Mahindra and Tata Motors have been gaining significantly in the XUV segment as well as in the segment of broad electric cars. Maruti is getting aggressive in the hybrid space. So I think this is more of a response to the hybrid car move and the price cut which is anticipated in that segment, and probably it is a business strategy according to Mahindra and Mahindra. Obviously they say that the bookings for Mahindra and Mahindra XUV 700 have been 23% higher in the month of June versus May. So there are no concerns of inventory build up, there is no concern of slowing demand. But this price cut clearly has spooked the street, which is expecting a price war or probably a competitiveness to probably see a peak when it comes to hybrid versus electric versus the SUV segment.
Right, I think Tata also had cut prices of Harrier as well as Safari, right? So okay, that's about autos, but BSE, Yatin, that stock was down somewhere around 4% today. Your stock that stock on your radar too.
Yes, in the budget there is speculation that STD might be hike. There is speculation in the market that the SEBI working committee is recommending to cut down the number of expiries per week. They're trying to cap the number of strike prices on which options can be traded. So yes, there are concerns around stock exchange stocks, BSE being the listed one and the only listed exchange in India. Now Investec obviously has a buy rating on BSE with a target of 3,400. However, they say that the regulatory risk could be severe than expectations. In fact, they believe that the regulatory changes, if implemented, could impact the business moving ahead, could impact earnings for BSE, because one of the key drivers for their earnings is the option segment, and also the company aims to protect profitability through higher market share and lower clearing charges. But probably if the regulator and the government were to take action on the explosion of option trading, probably BSE being the listed entity could see some earnings cut as well as reaction to the stock price. Clearly, since the announcement or probably the regulatory thought process that there should be some work which needs to be done, the exchange stocks are nervous, and BSE clearly has seen some bit of price cuts. Today also down another 4%.
Yeah. And especially since BSE had been gaining ground in the derivative segment, right? It had started giving stiff competition to NSE, but now, of course, if the these moves or these regulations come into play, then that will not be very good for BSE. But of course, paint stocks, vibrant session, and for a change, they weren't seeing red today. On the back of a price hike coming in from Asian Paints, anywhere between 0.7 to 1% across product categories. It's the first price hike in 12 to 15 months. Companies had announced 4% price cut in Q4 and no price cuts in Q1. So Asian Paints, of course, is the trendsetter, being the industry leader, and other companies follow, which is what happened. Berger Paints also announced a similar price hike with effect from 22nd of July. But this price hike should be viewed as one of many, right? Because usually paint companies hike prices ahead of festive season, but this time around the price hike has come ahead of the monsoon season when the demand, kind of takes a hit, right? But Q1, of course, for the paint companies likely to be weak. There has been election-led disruption as well, and demand revival, if any, could only kick in from the second quarter onwards. The key thing to watch out for will be whether there will be enough demand to absorb these price hikes. And, there is, of course, intense competition in the sector after, Birla Opus's entry, where they have highlighted a very ambitious target of 10,000 crore rupees in sales in the next 3 years, and they of course launched at a 5 to 6% discount to the market leader. So a lot of these factors were hurting paint companies, and look at shares like Asian Paints at a time when markets are at all-time highs. This stock has been an underperformer, 13% down on a YTD basis on Asian Paints. But here on this sounds as good news, but a lot will depend on whether or not there is enough appetite to absorb these price hikes, Yatin.
Absolutely, but clearly today the market is cheering that after a long pause, finally there are some price hikes, especially when raw material prices are stable. This price hike probably would mean better margins for all of these paint companies.
That's correct, Yatin, but it was a down day for us. We've halted the record setting spree, but let's see, tomorrow is another day. We saw buying emerge at lower levels, right? So who knows, we could continue seeing that tomorrow as well. But with that, we are timed out on this edition of Closing Bell. Thanks a lot for tuning in. From me and Yatin, have a great evening and come back and join in tomorrow morning again at 9 a.m. with Opening Bell.
Thank you.